Good evening, all. Ira Epstein of Linn and Associates with your metal market wrap-up, and this wrap-up is for Tuesday, and we're at the 10th of August, 2021, and we're right now just after the 5:20 time frame. So we saw the day where the first phase of the infrastructure package has passed the Senate. They're immediately on to, if you've been watching C-SPAN, which I watch sometimes, adding amendments. This is the vote-a-rama. Do you know what that means? Vote-a-rama means that each of the senators gets to bring out the pork, as it's called, for their own amendments so that they can go back to their home state. Look what I put into this bill for us. That is what goes on. Most of it doesn't make it, but you give them their day and they deserve it, and that's how politics work. You don't like it, go in and change it. That's that simple. Budget talks will get under the way now, and then it all goes to the House, and in the House that's going to be fought over probably, September. I think August now, you're pretty much done once this vote-a-rama ends in the Senate. Everything will go there and sit there for a bit as people take their summer breaks, then come back, and away we go. That's probably why you're down in the stock indices. It's, in other words, buy the rumor, sell the fact to a certain degree. Now, this morning you were fighting pretty hard to get the gold and the silver back inside the Bollinger Bands. They really didn't do it. They're still outside of them. I haven't looked so far. I prepared the charts, but I don't know where we're at with that. The dollar index, these are what, 4-month highs, so that's come back rather smartly if you look at it. And bonds and notes ever so slowly. The futures keep falling and the yields are going up. You're around 134 in the 10-year now. Now, if you take a look at gold on a weekly chart, you've just collapsed the market. The interesting thing, and I really want to show this, the week isn't over. You know that, and I know that. This was the week of August 6th. Remember this low back here. So if we come over to this low right here, the low of that was 1767.90, and then the market turned up. You see what I'm getting at? We then dropped back last, what was it, the 6th? Right. And you finished at 1760. That in itself hurt the market. It put it back into the downtrend. You could argue lower highs, a lower low, and then you're getting the plunge further this week. On rallies back up, expect that. Wherever that 18-week average of closes is to be the resistance, it's 1810.90, getting there. I'm not saying it's doing it anytime soon. When you take a look at what happened today, you have a pause. When you get an inside day after a huge down day, it's no more than a pause. Don't think it means the market's going up or down. It's a pause. That's what I've learned off of that. When we take a look at the chart action, I still don't know what to do with this day. That's why I've got this down, that up. It's still, in terms of the swing line, a very difficult time. The whole thing happened, if I come back with you, here is an outside day to the upside. You took out that low, and then you're searching for the lowest moving average. Well, where do you think that came in? Right down there. When that occurred, you got under the 100, and it never looked back. I mean, all the other moving averages are above the market, and you have what's called a classic bearish setup now in moving averages. You have the 18-day under the 100, the 100 under the 200. That's a classic bearish setup. Short term, medium term, longer term. Nothing pretty on this chart. A lot of resistance in that whole area starting at 1795.90. But as I told you, I'm looking for this market to fight to get back in the Bollinger Band. And you'll say why. And the reason is the way the algorithm is designed, 95% of the time, the market will trade within it. After getting this sizable break in but 2 trading sessions, my experience has been that you climb back to it and do it in quick order, because it's not like the market's going to have to work its way a lot lower. You've already taken out the stops under the market. When we take a look at the slow stochastics, they have corrected from being oversold that fast. So you've got the trend down, the bias down, the market fighting to get back inside the lower Bollinger Band. That number is 1730.60 or it's 1730.20. When you come to the gold-silver ratio, it's ugly for the silver market. You fell back, and I thought you had a chance all the way back here on the dailies where maybe this was where the silver was going to be able to bend over and start gaining. Well, that didn't happen, as you know. Once the jobs data report came out, this market just got smashed, and that's where you're at this point in time. When you look at silver, like the gold, you drop down that dramatic amount in the past 48 hours prior to today. And now the market's going to fight, I think, to get back inside the Bollinger Band. And if you take a look in your momentum, you're oversold still. You don't want any part of going, at least, let me put it this way. I don't think as a professional you want to sell under the lower Bollinger Band. You can do what you want. If you were my client, I'd be saying I don't think you want any part of selling under that number at this point. In the copper market, this rallies back up to their first resistance areas, the 100-day average and then the 18. The pattern is still one of lower highs, lower lows. To negate the downtrend, you have to get over this number right where I'm pointing, and that would be specifically 442.15. So what do I think the pros are doing? Well, this gets difficult. You're oversold, so I don't think they're selling short. The second thing is there's an awful lot of risk to go short from 436.55 to 438.50 and then risk all the way back up $1,000 a contract. So it's hard to get short because of dollar risk, but the trend is down, the bias is down, the oversold is a problem. Platinum is arguing it doesn't want to stay under that Bollinger Band. No surprise, but something else is trying to happen. Keep your eye on these slow stochastics. You already got a 21 reading. So on the close today, and that's where I want to head, you didn't have that, but now you're getting it. First warning sign, the day's not over, obviously, but any close over 21, I think the pros will close their short positions and call it a day. The momentum's turning. And if you look at the palladium market, you're already getting that type of turn. You got down today, challenged the 2600 area, missed by about $4, the lower Bollinger Band, in a very oversold condition, as you can see, and now you might get a bounce. In fact, if you get over 2672.50, I think that signals the end of this leg of the decline, and I think you go into a chop between the lower Bollinger Band and the upper band, as you can see. Dollar index getting pretty stretched out. I'd get nervous up here. I think the market will have great difficulty in pursuing further rallies, anything over that upper band at 93.27. That's where I'm looking for the smart money to take money off the table. Now, there's already a window envelope up there, but I'll show that to my paid subscribers in the morning. In Ethereum, you've been riding every day, back, forth, all over the upper Bollinger Band. And what did I tell you when that pattern develops? You will embed the slow stochastic. So on the first reasonable break, I'm looking for the pros to start buying on the breaks in this market as long as the red line stays over 79. When you get rallies like this, what you will hear is people come out in Bitcoin, and I'll talk about that in the financial update, and they'll go back to, oh, it's going to 100,000 right now, it's going to 500,000. I'm not making this up. This is what these people believe. I'm not saying that they're wrong. I don't know. I have never been able to figure out why there's a value to a cryptocurrency that is backed by nothing. But hey, I've been left in the dust. Other traders are doing that. That's okay. As a trader, I don't care what I trade. As an investor, and that's what they're trying to do, I've got a different attitude on all that. In any case, you know, if you're watching what's going on, it's full of action and it's a lot of fun. It is. It's fun right now. I'm having a ball because I'm in the stock indices and my clients are enjoying it. It's not that I want to be in the stock indices, it's where the action is right now. You'll say, well, the grains have the action and the other parts have the action. You're completely right. But that's why we put out these newsletters all day long. I don't know what you get from your broker, but we're writing all day long on all these different markets. And if you have our charting software, you can listen to our oral commentaries from the Linn Research Group. I think that if you haven't tried it, it's worth you giving it a try. It's free. All you need to do is call my staff. They'll pick up or leave us a voice message if we're not there in the evening. During the day, just go to www.iraepstein.com, hit free offers. It's all there for you. Try the newsletters, our special reports. If you're a grain trader, we're going to be all over the grain market starting this Thursday as the huge grain report comes out Thursday morning. You have a good day.